everyone. I'm Krishna Karwa, a senior research analyst with iFAST Financial India Private Limited. In 2021, we had a lot of passive fund launches in respect of niche and differentiated strategies. One such instance pertains to the Nifty 200 Momentum 30 Index. To understand this benchmark better and the nuances around it, I have with me Mr. Pratik Oswal, who heads the passive product space at Motilal Oswal AMC. Hi Pratik, glad to connect with you. At the outset, we would like to understand as to what this index is all about. And since there is this word momentum, does that really indicate that it's more from a trader's point of view or not quite?
Yeah, thanks. Thanks for having me out here. Looking forward to our conversation today. And yes, I think excellent question. So momentum is a very short-term sort of word that that keeps being talked about. But actually, there's a way in which you can actually capture this momentum in the form of a mutual fund or an ETF, and these sort of funds are called factor funds. So I think when you look at the US, for example, index funds and ETFs have obviously, become quite big, and we believe that this segment obviously is going to be a lot bigger. But within index funds and ETFs, a lot of investors would have heard of a Nifty or a Sensex, which are the most popular ones. But most investors don't know that, you can have hundreds and thousands of indexes out there. You can have indexes in the international space. You can have indexes in commodities like gold and silver. You can have indexes in debt funds. You can have indexes in sort of the more mid cap, small cap. And so these have all sort of been popular in the last 2 or 3 years' time. And we believe that over the next 2 or 3 years' time, there's going to be a lot of interest in indexes that capture certain sort of attributes of how sort of strategies behave in the long run. So momentum is one such strategy. So if you look at globally, this is a segment called rules-based investing, where you basically invest in products based on certain predetermined rules. And these are essentially called factor funds, and factor funds are basically funds where you can invest in a particular strategy. So, some of the most common, or at least the more popular factor funds are a quality factor fund, or a momentum quality factor fund, or a low volatility, or there's also a value fund. So just to give you a small analogy, today we know that a lot of fund managers out there, have strategies. You have a value fund manager, you have a growth fund manager, you have a fund managers that's looking at, say, I think low volatility of very stable stocks, and these are, available in bulk in actively managed funds. But you could now, investors can also invest in these strategies, in a very low cost way through factor funds. So what is the momentum fund? Momentum fund is basically a fund that captures the movements of stocks that have done really well. So a lot of the stocks which have given sort of done really well in terms of appreciation in the last, say, 6 to 12 months time are actually a part of this index that you can invest in. And obviously you can invest in that strategy for a very long time. What we've seen is that even though momentum is a very short-term figure, actually, momentum, not only in India, but also worldwide and in all asset classes, has actually managed to deliver outperformance over a broad-based index. So for example, in India, like a momentum index, which is the underlying strategy, has delivered, I think upwards of 5 to 7% of outperformance over obviously 10 to 15 years time. So that's why, factor funds are, type of funds. So they come in between active and passive, where the whole idea behind factor funds is that, it's able to outperform the underlying index. At the same time, it's very low cost. So, investors who want to maximize their wealth can also look at, these factor funds where they can maximize wealth, will also ensure that they're not paying too much in fees. So that's just a broad framework of, I think this style of investing, which is very new today, but, it's going to be huge in the next 3 to 5 years time.
Well, that's an interesting insight into factor funds, and for people looking to capture a select part of the broader indices out there that are available. So well expressed when you mentioned that it bridges active and passive investing and gives you that benefit of low cost as well.
Yeah, absolutely.
So Pratik, moving on, what makes a strategy like Nifty 200 Momentum 30 relevant in an age and time like this, where we have seen a lot of stocks rallying from the bottom of the March 2020, and now with all the hype around global factors, QE tapers, rate hikes, etc. What makes you believe that this strategy is still worthy of an inclusion?
Yeah, absolutely. So essentially, momentum is a lead factor. Whenever things keep changing. So I think if you look at momentum as a factor, it's essentially taking and it's very agile in the sense that it will always pick up themes and sectors that are doing well and ensuring the money is invested there. So essentially, just to give an example, and this is not only sector wise but also mid cap and large cap wise. You'll see that momentum really plays, for example, this year or actually 2021, a huge proportion of this momentum index was in large caps, which whereas mid caps, which did really well. Whereas in 2018, we all remember that mid caps and small caps were not doing well, and this momentum index actually captured that by holding mostly large cap stocks. It also happens in sectors. So we saw that 2000, I think 20, healthcare stocks were really doing well because of COVID. So that really got picked up by the momentum index. And today you have, I think industrials is a big part of the momentum index. So the whole idea behind investing in the momentum index is to capture recent trends. And, it ensures that in a bull market scenario, which is what we've been expecting, I think over the next 3 to 5 years time, momentum has historically shown that it has actually managed to do really well, especially in bull market scenarios. So I think given where we are in terms of, uncertainty about what will do well at what time, this is a strategy which is very agile. It picks up just the stocks which are doing well. The idea behind this strategy is that, a lot of growth comes in smaller aspects. Investors tend to be late in terms of them investing in certain stocks. So this picks up stocks when there's initial sort of, I think growth, and then tends to sell those stocks whenever the growth ends up happening. So I think that's basically what a momentum index is. In terms of the index itself, it's basically a Nifty 200. So the top 200 stocks within the entire sort of universe, which is top 200 companies in India. And it chooses the 30 stocks which have the highest momentum out of this 200 sort of universe. So Nifty 200 will be your broad-based benchmark, and then the 30 stocks which have the highest momentum will basically be chosen out of this 200 stocks, and that's where most of your money, or it's actually all of your money, will be invested in those stocks. So the idea here is that it's a very agile index. It changes as per I think how markets change. It reacts very quickly. And what we've seen is that, it does in a very systematic way. So there is no fund manager who's managing this at all. It's completely based on, rules. And because of that, there's not even any bias when it comes to investing. So it's a zero bias investing. You have this rule, and that rule stays consistent for, as long as possible. And you're just investing in that rule. So I think, so I think at least in this climate where it's very hard to know, what strategy to, invest in, or what I think large fund to invest in. This is a very good agile fund that will be able to sort of keep up with the changing times.
Absolutely. And one benefit out there is the stock and sector rotation, and you also get exposure to large and mid caps by virtue of the top 200 companies.
Absolutely. So that's the idea behind this index. And also even and we've seen that even over a calendar year basis, last 15 years, it has managed to outperform in, I think, 12 out of the last 15 years in terms of calendar year basis. So I think that just shows how agile this index is. Having said that, just like any other managed fund, it's important to investors to know that this is not obviously investors are chasing alpha or outperformance to be able to maximize your wealth. But it's important that investors know that, obviously before, a lot of these funds come in the market, that these funds are not always outperforming. So having expectation that this will always outperform at all times, would not be the right thing. I think there are moments in time, just like any other actively managed fund, that this will underperform at times and will outperform at times. So I think investors looking at this should look at it from a long-term standpoint. Typically in a bull market scenario, what we've seen is that the momentum does really well. Because it tends to catch on to the stocks that are the highest growing So essentially in today's time, it's the great strategy to have in your portfolio.
So yes, it can be risky at times, but still has that element of promise for people who have that appetite.
Yes, exactly. So it has it. So in terms of, I think risk is very subjective. Risk means how. I think a risk can mean how much you can lose. Risk can mean what's the standard deviation. Risk can be what is the, I would say, the potential of it outperforming at all times. But yes, I think in terms of risk, what we think in investment management, and this is what a lot of people would say, that you should ideally have a core and a satellite portfolio. A core portfolio is a portfolio of mutual funds which will not touch for life. By life I mean very long time. It stays in your portfolio. It basically it's your sort of long-term portfolio, like a simple index fund. Can be a good example of that. And then obviously you have a satellite portion where you want to basically maximize your wealth out there, where you want to take 3 to 5 year bets. And I think this comes under that satellite portion of your portfolio. So I think that's very important to understand that, yeah, this is obviously on the higher risk side, but even it's being compensated by higher returns. So I think investors who are looking for that extra risk or want to play the momentum, can look at this fund.
Quite interesting. So Pratik, moving on, this clearly seems to be a very dynamic index, and one where constituents would be subject to change from time to time. Can you tell us how often that happens?
Yeah, exactly. So, very important, the constituents do change a lot. So, I think, and if you compare to any other fund out there, this fund is a much higher churn, because momentum changes very frequently. Momentum changes very frequently in the market. The market might pick up one sector or a couple of sectors, and that it might rotate to some other sector, or even size. Sometimes the momentum changes into mid caps, sometimes the momentum changes into large caps. So because of this, the churn or the churn of this fund is a lot higher. I think it's close to about close to 100%. So investors can expect that sort of churn in their portfolio as well. So the top 10, top 15 names keep, or even the top 30 names, a lot of the stocks may change year over year. So it's not a very stable index. But again, the whole idea here is that you're playing momentum, and that keeps changing. And even if you look at sector rotation and size rotation, for example, let's look at December 21. Most of I would say about 31% of this index is in IT, and IT is done phenomenally well. So but IT can go on to 0%. For example, in 2020 or even December 19, which is 2 years back, IT was doing really badly back then, and this fund had a 0% holding in IT. So sector rotations can be quite large. For example, commodities. We saw a huge commodity boom last year in middle of last year. So this index had close to, I would say 25 to 30% of its holding in commodity related stocks, whereas now it's come down to say 19%. So there's a lot of sector and size rotation, which is actually one of its big attributes, because things keep changing in the marketplace. And this is a sort of an agile fund out there. So it's basically picks out the stocks which are doing really well and making sure that they're giving you that exposure and it's obviously rebalanced every 6 months time. So every 6 months time, a new sort of set of stocks come a part of the index which have done really well in the last 6 to 12 months time. So that's basically how this fund works.
All right. And Pratik, when we speak about momentum, we are referring essentially to the price movement, or are we also taking volumes under consideration?
Yes. So when you take a momentum, it's all price. I think so. You basically take the 6 month and the 12-month price, and you calculate something called a momentum score, based on which you choose these 30 stocks. And within these 30 stocks, you would obviously give the bigger stocks more weightage than the smaller ones. So it makes it easier for this fund to scale. But that's basically how it is. So it's mostly price. There's nothing else that is, there's no fundamental research, there's no liquidity. I mean, I think the fact that the bigger stocks have more weightage means those liquidity concerns are not there. But yeah, it's mostly price, and which is why it's a good rules-based fund for investors only looking at price to make their investments.
Yes. And Pratik, you started off by talking about how factor investing has now come into India and continues to grow. There is another aspect of passive investing, which is ETFs, which also seem to be growing by the day. And clearly, in the context of this index, you're trying to blend both strategies. So you give investors the advantage to capitalize on momentum, and at the same time, the flexibility that ETFs have to offer. And you also alluded to the fact that these products are low cost in nature. So, in the context of the Motilal Oswal Nifty 200 Momentum 30 ETF, what would the TR be? And is liquidity going to be a challenge for people who want to transact in large volumes?
Absolutely. So, so we have been very active. We've been there in the space for a very for now almost 10 to 11 years as an AMC. So we have a good understanding of market dynamics, and we believe that both ETFs and index funds are have different sorts of groups of people who like it. A lot of ETFs are preferred by institutions, family offices, and a lot of retail customers who want to buy from demat accounts. And index funds are chosen or preferred by people who want to set up SIPs or large I would say financial advisors and all of that. So we believe that, and through this index, which is the Nifty 200 Momentum Index, we're actually providing investors both options, the ETF as well as the index fund, so they can really choose what really works for them. And so we've often seen that investors want the ETF, but they have to buy the index fund, and vice versa. So we're having both options, so investors can choose. I think the returns of both will be pretty much the same. It really depends on what structure you like. In terms of ETF, yes, we work closely with a lot of market makers or authorized participants who ensure that there's enough liquidity on the exchange. And historically, we haven't had a lot of issues there. So, we obviously work very closely with them, and we ensure that if there's demand coming in, we are obviously putting supply out there whenever is needed. So I think investors who are looking at buying large blocks, I think they can either come directly to the mutual fund or they can buy through the exchange. And both are, I would say, equally good. So I think liquidity, will not be a challenge, for ETFs. It's just that, prices may sometimes go out of whack. So investors should look at the indicative NAV, which is on the AMC website, before buying and selling ETFs, because that is the true value of the price. So, but I think investors have both options. They can obviously choose whichever one that suits them.
Absolutely. So Pratik, you did touch upon a lot of common aspects or questions that people had in the context of a product like this. Anything else apart from this that you think is worth taking into account?
Yeah, no, I think you've covered the questions pretty well. I think, factors obviously is very early days for factors. And, it's huge. It's about $3.5 trillion worth of investments in the US, which is, in context, more than India's GDP. So, it's a huge, part of finance, and it really breaks down investment returns in a very easy way. A lot of people say that, a lot of the outperformance or a lot of the returns are driven by value or driven by momentum or driven by, I would say, low. So it really helps you break down strategies and returns. And if you can buy these strategies in a very rules-based format, then it makes it very easy for investors. And obviously, one big, I would say, not complaint, but I think like the problem is in index funds for a lot of people are too simple in nature. And the fact that, most people feel that, they are able to outperform the benchmarks. And I think this gives you that access, at still a very low cost, which is, I think, one of the main reasons to why, people really like your Nifty and Sensex, because they're very low cost and, they do the job for you. So I think this is a good sort of in between sort of a product, which really helps you, with the cost as well as your returns. Obviously, returns are not consistent. So investors, have to be able to stick to a strategy for a very long time. And obviously, so we believe that, this is a good long-term product for, investors' satellite portfolio, where they can look at it from a 2 to 5 year perspective. And it really helps, them sort of maximize.
Well summarized, Pratik, and we echo the sentiment and strongly believe that these kind of strategies can be used for that opportunistic alpha generation, which a typical headline index would miss out on. Thank you very much, Pratik, for taking out time, joining us and explaining these nuances at length. And thank you very much to all the viewers as well for tuning in. We look forward to joining you all pretty soon. Goodbye.